guys, welcome. My name is Yuri. I'm founder of Venture VNTR. Some of you might be our community members. We are one of the largest investor communities, and we connect investors to each other across more than 250 events a year. And today we met to discuss different investment strategies, and each of the panelists, they have different investment strategies. And let's start with quick introductions. Ladies first.
Thank you. I would suggest to invest in closing the gaps, but maybe more later. I'm the co-founder and CEO of Europe's biggest female finance investing platform, elleXX, and I'm really happy to be here among big investors.
Where are you based?
In Zurich, and I'm also actually a mountain girl. You heard it before. My mother is coming from this area, so it's a home run for me, looks like.
Amazing. Naor?
Nice to meet you guys. My name is Naor Baruch. I'm the founder of AlgoBless, which is I have two hedge funds, one of crypto, one algo trading. We've been in the market for already 6 years, and happy to be here. I'm from Israel. We're traveling all over the world.
Amazing. And Andre, please.
Hello, everyone. My name is Andrei Marus, partner at VC and co-organizer of Unicore events in the European Union region. We have been invested over 100 startups around the world, most of them from United States. And we have this very good result, 7 exits up to 32x. And we concentrate our effort in meal tech, defense industry, and longevity of this year.
Cool. And we have Alex, who joined us late. Welcome, Alex.
Better late than never. Apologies for being late. So I'm with a fund called, I was running late.
Maybe late.
Black River Ventures. We invest in late stage businesses. Catching my breath. And,
Let's move on, and you can introduce
just 1 second.
later.
So we invest in late stage businesses, $20, $30 million checks. Primary focus is fintech, IoT, and consumer. Geographies, mostly North America and some Western Europe.
Cool. Yeah, so thanks for the quick intros. Each of you invests slightly different, from hedge funds, early stage, late stage, and Patricia, maybe you can elaborate on your strategy, because we didn't learn about it.
Yeah, I mean, you may realize the Oxfam report at the beginning of the WEF, and we kind of really reached peak inequality. So it's crazy. I mean, the gap between poor and rich is really widening, and also, especially women are affected. They have 50% less of wealth, of money, and so on total, we are 105 billion. Trillion, I always have to mix with German and English, trillion poorer than men. So I think inequality and also exclusion, financial exclusion is really a macroeconomic risk. It's getting a macroeconomic risk. So we have to do something to include people, to democratize investing. I mean, we all got richer here in the room. I mean, you could just use a simple and cheap ETF strategy, and we just got richer and richer in the last couple of years. But we are privileged. That's a tiny group still in the global consensus. And so we really have to build and work on democratizing investing, because it's the only way in the current system that we kind of can close the investment gap, and that we kind of close the gaps.
How do you democratize?
Of course, we are a fintech, and so in Switzerland alone, you have 300 billion female money just lying around, not invested, and there is a lack of financial literacy. Especially with women, we see there is a gap as well with financial literacy, with money education, where it starts very early. And in the whole world, there is 40 trillion money just lying there, female money, and it's not invested. And that's kind of our mission, make every woman into an investor so that we can really close the gap there.
Cool. Yeah, Andre, we will. Sorry, it's not going to be.
Oh, actually,
no, it's different question. It's kind of again. So you, Andre, you're investing in early stage and lots of deals. Typically, it will take 10, 15 years to an exit. So what is your perspective on the current VC landscape? So you're based in Silicon Valley as well, right?
Yes.
Yeah.
Actually, for this year, we concentrate our efforts the miltech and defense industry. Why? Because we receive very good results, 2x, 3x for the 1-2 years from different startups. And we are waiting for this year our first unicorn of this area, defense industries. That's why my perspective, I assume longevity and defense is the most prospective industry around the world for this moment.
Not AI.
Not AI. No, if you talk regarding AI, it's a part of any project right now. It's not industry, that's all.
Became a commodity.
Yeah, absolutely.
Cool. And Alex, so you mentioned you invest in late stage, right? With 2 different funds, you did invest quite in late stage across fintech, a lot of fintech. What do you recommend for investors? Like there are lots of IPOs coming on, right? And M&As. So you guys will have liquidity soon. Hopefully.
Yeah, we're really looking forward to the IPO markets more opening up. We really hope that there will be some change in the Fed and more accelerated lowering of rates, which will certainly help on the fintech side, which are really, really tied to interest rates like many other sectors. So it was an interesting period for late stage investing. I think the market has been quite tough, where the valuations were set really high for rounds that were raised during and after COVID, or in that post-COVID hype, I should say. And then at the same time, the IPO markets were also closed. So it was a very challenging time, I think, and even across venture, there was a pause, but we're seeing a lot more activity even within our fund and the industry itself. We're quite bullish, obviously, on AI. We're not allocating to longevity in the fund, but we are obviously it's top of minds of many, not just ultra rich, but I think consumers and consumers globally. So it's a sector that has I'd say an eternal demand, really. For time to come. So we're very excited like you said, for the markets to open. We have a number of companies in this that are actively already hired.
Preparing
for IPO, hired advisors, going through governance and all kinds of preparation. And really, I'm thinking about one of our biggest investment where I'm on the board, where really the position is, let's get ready, let's be fully prepared, and when the right time comes and the valuations are right, let's go. And if not, we can wait longer.
Cool. Yeah, Naor, you are investing in different asset classes, super liquid, crypto, stock market, right? Stock market as well. So maybe you can share with us where do you see alpha and opportunities now?
Well, first thing, I prefer stocks and crypto because it's liquidity. I get my money out whenever I want, which for me is the best, Money's closer to you, you sleep good at night. In the crypto, I'm more than 10 years. I made more than 100% for every year. And algo trading is a bit better than that. The percentage are lower, but it's a lot more safe to make 60 to 80%, even in 2022, which was the best year. Like S&P was minus 20%. We made almost 90%. This algo trading is based on AI, on quantum physics, that we have built for many years. It took us a very long time. I took some people from Singapore, from IDF, mix it together, and we're managing now a few billions. We max capacity. We are not raising investors for both hedge funds for more than 4 years. And in my opinion, I can see Bitcoin in $1 million, between $600,000 to $1 million in 2030 very easily. And all the quantum AI stocks will go up. Like a BTQ, I was made a lot of money this year. That's my opinion.
So what is your opinion? Like, why should someone invest in VC if they can just give you money and you generate much better ROI?
They can't give me money. I'm closed.
Because you're not receiving.
They wish to give me money.
So can we just copy trade?
But no, you can copy trade me. But in my opinion, I think like stocks is the easiest way to make money these days. She said something very smart. I'm managing a few businesses, as I said, and I stopped my life and I opened a community all over the world to help small people to make money. And I give them some tips. I gave them 3 tips this year, and they made 400% just for my tips. Why I did it? Just to help the small people. And in these days, even I work in Israel on next year, in every school in Israel, they're going to study finance, like stocks, crypto, hedge funds, real estate, loans, banks, which will be the future of the people. That's how you change that's how you change the future of finance in your country. That's the only way. If you teach them to think differently, because everyone is making money. Everyone is working. He makes $1,000 a month or $1 million, doesn't matter. He makes money. He can put aside some money. The moment he starts saving money and put it on the side, and he will see results in 2-3 years, he will think differently. He will not spend his money on clothes, on Gucci. He will say, wait, I will buy Zara and I put money on investments for my future. And that's how we change minds of people.
Cool. Yeah, Patricia, you also mentioned kind of bridging the gap.
And one small thing about longevity, I think it's the future. There is a clinic called La Prairie in Switzerland. They're investing now $500 billion in a clinic to open in Saudi Arabia. I'm investing for myself a lot of money in longevity. All my friends that I know that are billionaires are investing in it, because investing also for our use. That's because when you have money, what do you want? To stay young.
Sure.
Yesterday, I participated in the longevity dinner, and I reviewed the very interesting statistics. 57% in the United States, only 7% in the Switzerland. It's a European Union, almost 10% maximum. The whole market to concentrate in the United States.
But the products are from where? South Korea or North Korea and Switzerland.
Yeah, I agree with that.
Cool. Let's touch how do you bridge the gap, right? So Naor mentioned education, which is quite important. I saw that you also have some education programs for female investors.
Exactly. And I mean, this is excellent. Just to build it into the system, financial literacy, you should start very early. You start money habits at the age 5, from the age 5 on. So you have to have good money role models and integrate it in the school. But also, what helped us, blockchain. And this sounds maybe, you talked about crypto, and we also have in our ETF solutions, and ETFs is very cheap. So its access is democratized. And also you can get crypto with ETF and everything. And you talked about real-world blockchain use cases. So we are a real-world use case here, because as a female founder, only 1% of global VC money flows into female founder. So there is no chance that practically no chance that a normal VC or a classic VC is interested in you. And the statistics don't lie. They don't lie. It doesn't flow into female founders, and we really feel that every day of working. But the blockchain, actually, they changed of law how you invest, crowd investing, and how you can fund money as female founders. They changed the law. For example, in Switzerland, it's possible with tokenized share that you get up to 8 million in funding. And so we hit the European crowd investing fund, because we kind of felt after hundreds of just talking that we will never get any normal funding. So let's do it via blockchain and tokenized shares. And so we could raise, as female founders, we hit the European crowd investing record in 2023. And for female founders, this is something like really, even if you are in the B2C market, it's even better. So this is something real use case. And of course, we can't say, the last 10 years, crypto was the most important asset class, so you can't deny that. But what we feel about women, of course, regarding crypto, not a lot of them have wallets, only 8% around. They're mainly interested in green crypto. So that's something that they're really interested in, and we see different behaviors in investing.
Cool.
I think that the next market, which is now where there is a few platforms and a few technologies working on it, is combining the crypto with stocks, that you can buy stocks through crypto. And this will be like the next big thing, in my opinion.
Cool. And Andre, so you guys have more than just investing, right? You have a lot of activity as a group around the empowerment of startups, different competitions.
No, it's very...
You don't do that anymore?
Yeah, information about us. Why? Where can I find this?
Again,
Yeah, we concentrate...
I know Alex.
Yeah. Ah, you know Alex.
Yes.
Yeah, I get it. I'm explaining. We concentrate right now, our effort is the small funds. We collect together the 8 or 10 startups from the YC on Anderson Horowitz acceleration program and propose our LP to invest it with us. Why? Because it's very complicated to find any project in the round A, guys. It's absolutely nightmare. We have not found to find any project during 3-4 months and more. It's a really nightmare. And for us, it's very important to invest at approximately 3 or 5 deals per month. We receive more than 100 deals per month. We did not find any valuable startups for us. It's really a nightmare. It's a very big problem. That's why we are concentrating our effort in the early stage project for this moment. Why? Because after I graduated the famous accelerator, SYC and other, most of startups to grow up is very quickly to funding in the next round. During 3 or 6 months, the valuation of any company, 25 million and more. It's a really good cases. It's my opinion.
Okay. Yeah. So in case of Alex, you invest in the best, right? Kind of late stage companies, pre-IPO, many pre-IPO deals.
Yeah.
It's kind of how do you get access to these, and how do you recommend others to get access to the top companies?
Well, I think Andre just talked about the challenge that any investor has in the private markets in deal sourcing. That's all of us face that. Obviously a really good strategy is aligning yourself with a very proven accelerators like YC that go through a very intense selection process, even at admission levels. So by the time Andre looks at it, it's already gone through a very rigorous process. The admission rate at YC is low. On our side, we'll look at his graduates. So he's looking at graduates of YC, we're looking at his graduates, from, so to speak. We typically start investing in businesses with $20 million of revenue. Our target returns are anywhere from 3 to 6x on each investment. We hope to stay with them for the next 3 to 4 years before the IPO. That's the hope. But obviously we're very, like you said, dependent on the markets. So if the market's closed, then everybody's kind of waiting. But that closed window tends to tighten funding all the way down the capital stack. So to answer your question, how does a private investor access a mature business that have raised hundreds of millions of dollars at this stage? There are some platforms that democratize access to those companies.
Mostly secondaries, right?
Primarily secondaries, yeah. And that's what a lot of times we have a mixture of both in our investment thesis. We are very open and do a lot of secondaries, and then we participate in primary rounds as well. And so I think getting access through secondaries, there's also some funds that are traded that have positions at certain names that are privates, and you can kind of ride those valuations. So that's one way of doing it. One approach that I've seen some investors take and I think it follows the advice of Warren Buffett, like invest in brands and things that you know. So he liked Coca-Cola, he liked Hershey's, he liked the razor blades, Gillette. So the same thing here, you know. You're using Pinterest, you love Pinterest, try to get access to secondaries of Pinterest or Canva, you know, some of those brands that we touch and we see, and I think that's a really good way of if you're a private investor thinking about accessing large privates.
Now a question to you, like as we prepare for many IPOs, hopefully this year, do you recommend to invest in the IPO stage, or like will your algorithms bet on
mathematically after every IPO there is downside, so
sure.
Historically.
So at what stage do you recommend to invest in?
My algo is working on that. We are taking the S&P 500, there's 500 companies. We're taking 120 companies out with like banks and someone who can bankruptcy. You stay with 380, and then if there is 1 quarter of losses, it's also out. You can stay with 280, 240 companies, and we play with that. Based on things that we have, basically what we have done is we did the mix between quant physics and stocks. I don't know if you learned finance, but in 1930 there is a mathematician who found something that it's like a radio. You know what I mean? I can show it if you on the
sure.
like on the picture. And so if there is like a risk and a reward, okay, so the reward is here and risk is here. Let's say Coca-Cola. Coca-Cola is very low risk and very low reward, so there is no point of investing money in it. Mm-hmm. So you need to find the highest reward with lowest risk. And we are making around 200 trades a day to maximize it. That's it.
So you do day trading with other algorithms?
The average is 2 to 14. That's the average, but there is also more than that.
Yeah. So
and we get in inside the same stock many times or making.
And you love volatility, right?
That's all I need.
Yes.
That's all I need.
Cool. Patricia, you mentioned ETFs. Can you elaborate which ETFs you guys recommend to invest and why?
Yeah, maybe first, personally, I'm really worried about the war on ESG. It's not about performance, it's about power and control and who's behind it and who wants to control it. And just, I'm really worried and concerned about that, and that it's, if you speak about smart capital, it's not always about, smart capital is not only the highest returns and that we continue like it was. We have to think about which kind of future we want to finance. And I think if you just ignore sustainability, it won't go away. Climate change won't go away. It will stay, and you kind of really postpone costs. You just don't leave out the risks. It's just postponing costs, what we are doing. And now with the war on ESG, it's now accelerating, big oil behind it, and just pulling out these outflows on ESG ones. I mean, we also see with our customers and users and investors, women are really very long-term investors. 92% of women think that sustainable investing is very important. They're very open to a lot of asset classes, as I also mentioned crypto, but it's green crypto. It's, of course, they prefer Ether to Bitcoin because it's more on the innovation case, it's the blockchain industry case, and uses 99% less energy. And so it's a lot to think about. So they think in generation, long term, and I think that's the way. Actually, smart capital is patient. Smart capital is kind of really thinking about our kids as well. What we heard here. And I have 3 kids, I think, in generations.
Cool. So, we have 2 investors, like especially one investor that thinks 10, 15 years forward, right? But how do you guys get faster liquidity, Andre?
Oh my Gosh. Yes, absolutely.
You sell to others.
The venture capital is not passion capital, by the way, right now. We are searching for project with our strategy to find any project with 2, maximum 3 years. We will return from this. And for us, it's very importantly is not to IPO. We are searching for a project get acquired. Yeah, for us it's very important too. Actually, the smart capital is absolutely is not the same. Smart capital is a passion capital. I'm absolutely agree with you. And if you will talk regarding smart capital, I some time to ask myself of this question: what's if a capital smart? Why does it keep the same mistakes? It's a really interesting question. Maybe it's a problem is not intelligence. Maybe the problem the incentives. It's my opinion. It's I assume most of problems smart capital, most of fund and any institutional investor, don't mention it, to use the same strategy. Why? It's the market absolutely to change it for this moment. It's not only to market. You government fragmentation to change it. Slow capitals to become the slower, and AI rapid growth is absolutely true right now as the biggest trend for this moment. And that's why it's for our fund and other funds, you need to absolutely to change it every year, to change the strategy every year, to concentrate their effort and any funds for different industry. It's not concentrate only the AI and other guys. Thank you.
I have a small question. 30% a year, do you sign for it?
Is not agree with you. Maybe
40? How much percent now you sign for me 10 years ahead?
40%.
40. You sign for 40?
Are you saying what? Are you asking what return?
Hypothetically, if I give you 40% return every year for next 10 years, you sign for it?
I think
he makes 100, right? So he gives you 40.
That's on crypto, but I'm talking algo trading.
Look, if one thing, we all learn from portfolio theory is that's all about diversification. And so...
No, just tell me, I give you now 40%, you sign for
instance, our investors, who are also, some of them are, multi-billion-dollar family offices, we're one part of the allocation.
Yep.
So for me, no, I will not give you 40% because...
Not give me. If someone is offering you 40% for your fund, and you sign for it, you take it?
Of course.
Okay. So I think it's very easy to make 40% these years because the moment the crypto go down, you buy it, you look at 10 years backwards, or 10 years future, I can put my name on it, and even $1 million from my pocket, it's going to make 40% a year. So it's very easy. Why need all this office and all these workers and all this?
Well, so one thing we've learned from crypto, So let's just talk about crypto for a second. So one thing we've seen from crypto, the original promise of crypto, like many asset classes, including, frankly, venture and private equity, is that the idea for large capital allocators is to say that it was an uncorrelated asset class. And what we're seeing now as the asset class have matured and serious capital finally have come, institutional capital have come into us, it's not uncorrelated. So the actual, yes, there's an extra alpha in this asset class. Is it going to be here for the next 10 years? What our investors are looking for, they have allocation to crypto. What they're looking for is diversification. And so, and they also want to be part of, and also, they also want to be part of some growth stories and some industries and companies that are changing industries and technologies that transform how we live, how our health is with longevity. And so it's not just, for them, it's not just about a money or return. It's also being part of a technology and a transition. And that's what we as venture investors offer. It's not just about a return.
Guys, we need to wrap up. So thank you very much for sharing your insights and your thesis. Thank you.
Thank you so much.
But we're not saying goodbye, because we just moved to another hall and continue our networking reception, and it will be curated networking reception. So, want it or not, you will have to introduce yourself once again. But let's have a photo first.
Yeah, thank you, guys.
Thank you.